from Bloomberg's World Headquarters in New York City, I'm Matt Miller.
And from our studios in Washington, D.C., I'm Kailey Leinz. Welcome to Bloomberg Crypto, a look at the people, transactions, and technology shaping the world of decentralized finance.
Coming up, the race for a spot Bitcoin ETF heats up. BlackRock and others with a flurry of refilings. A possible silver bullet to help get a fund across the finish line.
We'll talk to the CEO of CF Benchmarks about this rush for an ETF. The company is one of the world's leading digital asset index providers.
And a Bloomberg News scoop on bankrupt crypto lender Celsius. CFTC investigators conclude that the firm and its former CEO broke rules before the ultimate implosion.
All right, so all of that is ahead, but first let's get a snapshot of the market. The best way to do that on your Bloomberg terminal, CRYP Go. And of course, as we've been talking about this rush to a spot ETF, that really has provided a boost for Bitcoin and other digital asset prices, but not so much today. Bitcoin down about 0.5%. We're still north of $30,000, but of course, this is part of a broader sell-off we are seeing in riskier assets. Ether 2 down about 1.3% as we're seeing stocks dragged down by the strong ADP jobs data we got earlier this morning. Feeds into the idea that the Fed's going to have to keep going for a while. The NASDAQ 100 to kind of illustrate that sapped risk sentiment is down by about 0.9%. One outlier I did want to point to, though, is Bitcoin Cash. This, of course, is kind of a derivative of the OG Bitcoin. It has seen a massive rally over the last several weeks after it was launched on EDX, that new exchange. It had a little bit of selling pressure over the last several days, but up about 8%. We understand South Korean traders may be behind a lot of that, but it is up about 200% year to date. That pretty much dwarfs Bitcoin's 80% year-to-date gain, though certainly, Matt, that's nothing to sneeze at either.
No, I'm also starting to notice a lot more flows into crypto-related ETFs. I've got ETF Go up here, the function that we use every day on ETF IQ, and Eric Balchunas pointed out yesterday that we've seen 1 month flows of $533 million. Now, that may not seem like a lot, but if you look at the year-to-date flows here, you can see that we're only up $456 million. That means for the entire year, with the exception of last month, we've seen negative flows, a real pickup in June, Kailey, as these ETF filings started to push investors into crypto-related ETFs globally.
Okay, so let's have more on that point. As we've been discussing, issuers are hoping to get across the finish line with approval for a spot Bitcoin ETF here in the U.S. And they've been busy refiling their applications after the SEC had indicated initial documents were insufficient. For more on the latest update, let's bring in Bloomberg's Vildana Heinrich. So, Vildana, what is the latest?
So basically, we've had this absolute flurry of applications from all kinds of issuers looking to get one of these spot Bitcoin ETFs out into the market, possibly in the coming year or so. But basically what's happened is that the SEC regulators went to the issuers and asked them for more information because the initial applications lacked a lot of the information. So some of them said they had intents to enter into so-called surveillance sharing agreements, whereby an exchange might provide pricing data and just more data so that the regulators can actually be monitoring the crypto markets, which they've said in the past, can be prone to manipulation and a lot of other worries. And so we've had a lot of issuers coming out, refiling or amending their applications to say, okay, we'll be working with Coinbase, basically all of them listed Coinbase, as the exchange that will be helping them with this potential surveillance sharing.
I actually caught up with 21 Shares co-founder Ophelia Snyder yesterday on ETF IQ, and I asked her about the differences and similarities between a Bitcoin ETF and other commodity baskets. Listen to what she had to say.
Settlement is a lot faster. You're accepting physical delivery. It's a very different structure from that perspective. There are some peculiarities to do with crypto ETFs, and it's things like forks and airdrops and specific security issues and specific custody issues. This is not a copy paste from hey, I've run a legacy commodity product, there's nothing new here. There are specific things that are new here, but they're now well understood and well documented, and there's a way to handle them that's actually very positive for investors.
So they've teamed up with ARK to file for an ETF in the U.S. They actually have 37 crypto-related ETFs globally. I think they offer some expertise that others maybe don't necessarily have in dealing with things like forks. That's not the kind of thing you have to deal with when you're putting together an ETF of gold or oil.
Yeah, actually, it's one interesting theory that I heard, because the question now is, if the SEC does grant approval for one of these or all of them, who would be first? Would the SEC say, okay, you can all go on the same day? Again, if approval does happen, because we do not yet have approval for a spot Bitcoin ETF. So the question really is, for issuers and also for potential investors, like, which one would they be going with? Like, do you buy BlackRock's ETF or do you buy Invesco's ETF? And one thing that I heard from people in the crypto space is that there's a potential for investors to actually want to go towards a product that is actually made and created and backed and issued by a crypto company, because crypto companies know the space really well, have been in the space for longer than, say, one of the more traditional players.
All right, Vildana, we got to leave it there, but thank you so much, Vildana Heinrich. We appreciate it. Now, speaking of one of those traditional players, of course, it was a behemoth institution, BlackRock, that kickstarted this wave of spot Bitcoin ETF filings, boosting overall sentiment in the crypto space along the way. And it was something that was discussed by the company's CEO, Larry Fink, yesterday. Take a listen to what he had to say.
We do believe that if we can create more tokenization of assets and securities, it could revolutionize again finance. And so we look at this as an opportunity. It costs a lot of money right now to transact Bitcoin, and it costs a lot of money to get out of that. And so we hope our regulators look at these filings as a way to democratize crypto.
Now, BlackRock's planned product would use a Bitcoin reference rate from CF Benchmarks, a digital asset index provider that tracks spot pricing and is a subsidiary of Kraken. I'm pleased to say that CF Benchmarks CEO, Sui Chung, joins us now. Sui, thank you so much for being here. How optimistic are you on approval of this product?
Hi, Kailey, and thank you very much for having me. Yes, pleasure to be here. We're very optimistic that approval will be granted by the SEC, because the SEC has consistently stated that it wants to see certain safeguards in place, particularly information sharing between the listing exchange of an ETF and crypto exchanges. That bar has been very clear, and we believe that bar is being met by the provisions that collectively we have all put in place.
I wonder what the surveillance what surveillance really means, Sui, in this case. We've heard that in a number of filings now. Vildana's been writing about it. We just talked to her. How do you see surveillance of a spot Bitcoin ETF as any different from surveillance of other commodity ETF products?
That's an interesting question, Matt. So traditionally, commodity ETFs, the commodity markets, the spot commodity markets are not traded on organized marketplaces. Spot oil, spot gold is negotiated over the telephone, via email, via chat, etc., not on an organized marketplace. So historically, commodity ETFs, where the listing exchanges of commodity ETFs have information sharing agreements with derivatives exchanges, because that's the organized marketplace where transactions happen. Crypto is a little different in that spot crypto, physical spot crypto, is traded on organized marketplaces such as crypto exchanges. And hence, we haven't quite been here before. There's no exact parallel. However, in the relationship between spot markets, ETF markets, and derivative markets, that is a well-trodden path through something called the ISG, which has existed for a number of years now. And this is a forum by which ETF listing exchanges and derivatives exchanges share information.
So a lot has been made, for the past decade about the public blockchain, Bitcoin blockchain, and the fact that you can see exactly where all of the Bitcoin goes from wallet to wallet. Even if the accounts are pseudonymous, you can still see the numbers. Is that the kind of data that you're going to have to be watching to make sure that you don't, buy blockchain from criminals or release any to criminals? Is it just really a deeper KYC using on blockchain analytics?
Well, I can't speak for the exchanges that are listing the ETFs and exactly how they will monitor and surveil the shares of the ETFs that they will list. I'm sure that they have very deep and detailed processes, but it could include that. It will also, of course, include being able to share information on exactly who has been trading the shares of the ETFs and who has been trading Bitcoin on those markets of significant size.
Well, Sui, the SEC's concern historically has surrounded the idea of potential manipulation in the spot market. You at CF Benchmarks literally track spot pricing. Have you seen any evidence of that?
I think that we as an FCA-regulated benchmark administrator, we actually have a burden upon us, an obligation to surveil our benchmarks, to ensure that our benchmarks are free of manipulation. So we have policies, processes, systems in place that have been approved by the FCA here in the UK for all of our benchmarks that we publish. Now, as you know, the Bitcoin reference rate has been published for 7 years now. And for almost 6 years, it has been used as the settlement mechanism for the Bitcoin dollars futures contract listed on the CME. So we have settled over $500 billion of CFTC regulated derivatives contracts listed on the CME using our benchmarks. And we have never, ever had an instance of the manipulation of our benchmark.
Okay, never, ever. That's the direct quote. Finally, if the SEC is able to put aside those concerns and ultimately does grant approval to either BlackRock's product or another that has filed for approval over the course of the last month or so, Sui, what do you think the real difference it's going to make is? How substantial will the impact be? Because it's been a lot of hype. I just wonder what actually happens if it happens.
Well, obviously, Kailey, that is the some large number billion-dollar question. It's very hard to know just how much demand there is. But if we look at, I think we can kind of triangulate to that number. If you think that, ETFs are the wrapper of choice, they are the vehicle of choice now for investors in the US, regardless of whether that's private wealth, whether that's long-term savings in the form of a 401k, et cetera, ETFs are the wrapper of choice. And about 50 to 60% of all US investors hold an ETF, at least one ETF in their portfolio. Now, you put that next to the fact that 20% of American investors now own crypto, physical crypto. So you've got 80% who still don't. And that 80%, if you cross-reference that with the 50 to 60% that own ETFs, if you have a Bitcoin ETF, a spot Bitcoin ETF, well, you do the math and you come up with a pretty big number.
Sui, it's fascinating stuff. We really appreciate you joining us. Sui Chung there of CF Benchmarks talking us through the potential for a spot Bitcoin ETF. Coming up, that cryptocurrency is falling a bit after hitting a one-year high. It's still above $30,000. We'll catch up with Stillmark's Alyse Killeen for where it goes next.
Plus, the CFTC is said to have concluded that Celsius and its former CEO broke U.S. rules. We'll have more on that Bloomberg scoop ahead.
And to access all the latest data and news on crypto, check out CRYP Go on the terminal. This is Bloomberg.
I think Bitcoin has a lot of tailwinds at the moment. partly because it's not named in any of these suits as possibly a security. It's not under attack. You don't see any of the Bitcoin-only companies being, sued by the SEC, for example. That's clearly supportive for Bitcoin. But also, you still have that same macro environment, right? I mean, it's evolving, of course, but there's still a lot of reason to be interested in a non-sovereign, global FX.
That was Alex Thorne on our program last week. Let's dig into the growing optimism in crypto with Alyse, Killeen, founding partner of the crypto venture capital firm Stillmark. And Alyse, I think it's fascinating you heard Alex talk about that. Clearly, the SEC isn't after Bitcoin or Bitcoin-only firms. Nonetheless, when you have 2-year yields above 5%, 10-year yields above 4%, it seems interesting that investors are still interested in, commodity that doesn't yield anything. Bitcoin's still hovering around $30,000. Does it make sense to you?
Well, Bitcoin is up approximately 85% this year, which of course means that it's outpaced gold, it's outpaced S&P 500, and it's still 50% off the all-time high it established in late 2021. Now, the price has been benefited by event-based tailwinds. Earlier in the year, we saw the SVB problems result in a revelation for many around Bitcoin's core value proposition of the ability it creates for people to be their own bank, which the value proposition, of course, became more clear with the banking crisis earlier in the year. More recently, the BlackRock ETF, Spot ETF filing has also created this event-based tailwind for the price. Now, this has been specific and distinct to Bitcoin, and as a result of that, we've seen it increase in its market dominance in the digital asset space. So it's a very dynamic time for Bitcoin.
What do you think is the ultimate killer app for Bitcoin? I mean, we heard Larry Fink yesterday on Fox Business talking about the tokenization of everything. That's been a mantra, I think, for believers over the last year. But it could be done with some other blockchain that doesn't have to be Bitcoin, right? What's the point of this, digital gold?
Well, so of course, when you're talking about the digitalization of an asset that you expect to hold for any term, the underlying blockchain is going to matter a lot. What you're going to be looking for when you digitize an asset, of course, is to find a stable, secure, and reliable underlying blockchain. And historically, that's only been Bitcoin. So what I mean specifically by that is that Bitcoin's uptime is unparalleled. It's at something like 99.999%. There's been no breach at the protocol level in well over a decade, and it's reliable. And what that means is that the hard rules, the important rules that define the protocol and people's expectations of it haven't changed and can't change by a unilateral movement of a single individual or foundation or team. And so it actually can't happen on other protocols, at least not easily. We've seen that Bitcoin sidechains, and in particular Blockstream's Liquid network, has matured to offer much greater and deeper functionality and to enable things like the digitalization of other assets to happen in a secure Bitcoin environment.
So, Alyse, as we talk here about Bitcoin, which of course is by far the largest cryptocurrency, as we're talking about potentially a spot ETF here in the U.S. that may get approval, Bitcoin spot specifically, as we're talking about those same regulators cracking down on exchanges, for example, for facilitating the trading of things that they deem to be securities, everything basically except Bitcoin. Are we in a world of Bitcoin versus everything else?
We're in a world where the difference between Bitcoin and everything else is more clear. So, of course, with the SEC action against exchanges, trying to bring exchanges into compliance with existing regulations, we saw that the SEC applied securities regulation to currencies associated with entities like Axie Infinity, Solana, Filecoin as an example. And Bitcoin stands distinct from that group for a few reasons, including that its supply and issuance schedule is not controlled by a foundation or team, which is different for the tokens that the SEC outlined in its actions against Binance and Coinbase. Now, on the flip side, the spot ETFs being advanced by some of the most sophisticated financial institutions in the world target Bitcoin. As you said, it's Bitcoin and not crypto that's being advanced in this first set of spot ETFs. And as a result of the sophistication of these players and their experience in dealing with SEC, we've seen a great sort of feedback and activity loop between filers like BlackRock and Fidelity and the SEC. And that makes the market optimistic that this ETF will ultimately be approved in the coming months or coming quarters. And what we expect to see from that, and the market has reacted, is a significant inflow of capital to the space.
All right, we'll see if that transpires. Alyse, that's all the time we have, but thank you so much. Please come back soon. That's Alyse Killeen of Stillmark. We appreciate your time. And coming up, we'll have more on the Bloomberg Scoop that investigators at the CFTC have concluded that bankrupt crypto lender Celsius Network and its former CEO broke the rules. This is Bloomberg. The CFTC has concluded that bankrupt crypto lender Celsius and its former CEO broke the agency's rules ahead of the company's implosion. This is according to a Bloomberg News scoop, and Bloomberg's Alyse Vershbrill broke that news and joins us now. So, Ali, what do we need to know?
So, as you mentioned, the investigators have concluded a number of things. Specifically, they concluded that Celsius misled investors. They concluded that they failed to meet certain registration requirements, and that also Alex Mashinsky, the former CEO, broke agency rules as well. So basically what that means is that we're at a very late stage of all of this. We knew that this investigation was ongoing for the last couple months. But if the commissioners decide to vote and they agree that an enforcement action should be taken, then we could see a filing as soon as this month.
And Alyse, I love your story. You point out that there have been a ton of cases, and they've actually gotten $4 billion back thus far.
Yeah, so there have been a lot of cases from the CFTC. They were actually the first one to bring a lawsuit against Binance Holdings Ltd, which is, obviously the world's largest crypto exchange. We've also seen a number of cases from the SEC, including against Coinbase recently. So this is by far not the only crypto case that we may see, and I'm expecting that enforcement will continue in this industry.
Yeah, 85 enforcement actions by the CFTC. Alyse Vershbrill, thanks very much for your reporting. That's all for Bloomberg Crypto. Coming up next week, we're going to talk with Tim Draper, legendary venture capitalist from DFJ and an early investor in crypto infrastructure. This is Bloomberg.